would I say NQ attracts traders who couldn't develop the discipline to trade the ES? Yeah, I think that NQ brings in a lot of gambling mentality traders. And you see this a lot. You see a lot of people enter trading NQ with these really weird strategies where they think that they're going to take these trades that are going to give them a huge win. It kind of brings in, like back when I got into trading in 2017, it was like during the crypto bull market, and everybody was like, to the moon, to the moon, to the moon. And it brings in that mentality. It's people who think that they're going to get rich trading in a matter of weeks. And it's unfortunate. Now, I do think that you can trade the NQ effectively if you know what you're doing, but I just think it's not beginner friendly. And unfortunately, most of the beginners start there because they see it as the biggest upside. But it's the same thing with like crypto. Like, I'm long-term on Bitcoin, but like I don't go like long-term with a big portion of my portfolio into altcoins. I keep like 80% of my portfolio or more in Bitcoin, and then 20% I will spread out amongst altcoins. I would never, and it's like, because it's smarter to be in the stable asset, and the ES is a much more stable asset to trade than the NQ. One thing I see a lot with the traders who are trading NQ in the early days is that they try to do these strategies where they like take these like small losses to try to get a huge win. I just think that is a crazy way to trade, like to just take a bunch of small losses to try to catch a big win. It just isn't like good for your psychology. Like, how could you handle taking like 5-6 losses and then try to make it all back in one win? I just feel like that's a bad way to play the game. You know, it's like, that's like doubling down every time that you lose a bet. It's just like, to me, it's not a good move. I mean, it's technically a little different because you're not actually doubling the size, but you get the idea. It's like if you keep losing, why do you keep entering? It's just not a good move. I actually was talking about this the other day with somebody. Like, the way I see it is, if you're a fighter, it would be a crazy strategy to just take a bunch of punches the whole fight and then just try to get one haymaker. Like, that's a crazy way to box. In reality, you want to be taking like small hits the whole time and weakening your opponent, and then occasionally you get like a nice knockout punch. But you're trying to weaken the opponent over time. You're not just going to sit there and just like play defense and take hits, and just try to get one opportunistic punch. Like, that's a crazy way to play the game. So that's how I see it. All right, so do I think that people who trade the NQ are just addicted to volatility and dopamine spikes? Yeah, 100%. I think that is a big part of it. I think a lot of people who trade the NQ, they're obsessed with the fact that the volatility is extremely high, so they can catch these YOLO crazy trade moves. But in reality, it's not efficient, because if you're trading an asset that moves super volatile, like, you're going to get stopped out more often. You're going to have weird stuff happen with your fills. There's going to be stuff where it just wicks completely through and your stop loss gets filled in the wrong spot and you just take a bigger loss than you planned. There's so much wrong with high volatility assets. And so one thing that you can look out for is, like, just think of it like this. You know, would you rather trade a stock that's reliable, moves consistently, it's relatively predictable with how it moves, or a penny stock that goes bonkers? Well, the thing is, a lot of people choose the penny stock option because they think that they're going to get rich that way. And that's the same thing with NQ. It's short-term gratification. It's kind of that gambler mentality a lot of the time. Now, I know that some people can trade it effectively, but the reality is it moves in a way that messes up most traders. And with the rise of all the prop firms, that's caused some problems as well, because a lot of the prop firms don't adjust how many contracts you can trade based on the futures contract. So the ES, when you're trading a cash account, it's only half the cost to enter an ES contract as it is to enter an NQ contract. But on a prop account, they don't even delineate. So like, if you have an account that lets you trade 10 futures contracts, you can trade 10 NQ contracts or 10 ES contracts. But that's not what you would do with a cash account. So that has caused some problems as well. So people trading prop accounts are constantly trading NQ, and I think a lot of them just don't know any better, unfortunately. Most of the time, NQ traders are just chasing that dopamine spike, because a lot of traders they get into this and they get addicted to the feeling of having a winning trade, just like gamblers get addicted to the feeling of winning. But that's not good for your strategy. If you feel like you're getting all messed up with your dopamine, your cortisol, everything's going all over the place, then you're trading with too big of a position size and you are not being sustainable in your approach. So that's the main thing. Trading the ES makes it a lot easier to control that because of how reliable it is and how it moves and how it respects the price action. NQ gets those crazy wicks that just stop people out all the time, and they don't respect the price action as much. So when you enter, you have to break your own rules with your stop losses and do a lot of weird stuff with unless you're trading a larger size chart. But then if you're doing that, you're probably going to be so over leveraged. Price action works on everything, right? It works on everything. Like, it doesn't matter the asset. As long as the asset has enough volume behind it, it works. So you can trade NQ with the same strategies I use on ES. You can trade crude oil with it. You can trade Bitcoin with it. I mean, I use the same strategies when I trade long-term stocks and long-term crypto and stuff like that. But you're right. The thing is, though, like the rules that we follow, where we put our stop loss one tick below the signal bar and enter one tick above and all that sort of stuff, a lot of that stuff gets messed up with trading NQ because the wicks will go just slightly further than you expect. So you have to give yourself more wiggle room, which causes you to run more risk on your trades a lot of the times. So yes, the trend line is still in play and you still have to pay attention to the same price action rules, but you just have to be aware that the volatility spikes cause it to not be as clean. This is a good question, actually. Do I think that there's any value in tinkering with the tick charts because you're seeing better entries on the 1500 tick, but you don't know if it makes sense? Yeah, so yes and no to this question. So I think that the 2000 tick chart is the best one. That's the one I trade. That's the one I stick with. I have experimented with this. I've traded the 1000 tick chart. I've traded the 1200 tick chart. I've traded the 1500 before. And what I can say is that they do work just like the 2000 tick, as long as you don't go lower than probably about 1200. If you start going lower than 1200 ticks on the ES, what you're going to find is that you'll get a lot more false signals and whatnot with the second entries and everything. But the other problem is, still when you go lower than the 2000, you get a lot more nuance in the price action, and sometimes the legs don't look as clean. So go look at a spot on the chart like this, and what you'll see is that there might be this might be a third entry on the 1500 or something. You just get some weird stuff that happens like that. So you have to be able to discern what a real swing is in your trading when you're doing that. You will sometimes get a better entry, but you'll also have more spots where your second entries will actually be a third entry or something like that, technically. But you have to understand how to look at legs. So I think that when you go lower than 2000 tick, it just confuses most traders. So your mileage will vary with it, but I like it better just sticking with the 2000 tick myself. Just keep it simple. Stick with it. It works better. The other thing to consider is that when you're on the 2000 tick, the signal bar is going to be even more reliable. So putting your stop below it is going to be even more reliable. So that's at least how I see it. You asked, what's my opinion on scalping 4 ticks? You think that many beginners would be better off scalping closer to 1-to-1. Getting most of the trades right is hard as a beginner. So there is something to this, but I think that just going for 4 ticks is not necessarily the best way. I think the best way to do it is to base your scalp on the 21 period ATR. So I look at the 21 ATR, and that's how I decide what my scalp is going to be. And so I go for 4 ticks only if the ATR is below a 3. If the 21 period ATR starts to get above a 3, I start going for 6 ticks. If it starts getting above a 4.5, I start going for 8 ticks. If it starts getting above a 6, I'm going to go for 10 ticks, and so on. So during that time when we had really crazy volatility, there was one day where my scalp target was 20 ticks instead of 4 ticks. So that's how I play it. And so yes, you are still trading with a risk reward where your loss is going to be bigger than your scalp target. However, I think that that's still the way to do it, because if you start going for a 1-to-1, the problem is going to be that you're entering in spots where you're just not going to get it a lot of the times. it can work, right? Like even here, like if you did a 1-to-1 on this trade earlier, it would have worked. On this trade, it would have worked. On this trade, you would have had a loss. I think. Maybe you have enough room. Nah, you probably would have had a win, but it would have been real close. And so you just have to be careful going for a 1-to-1. You can do it. You definitely can do it. You just have to understand that if you are going for a 1-to-1, you are going to get some losses that would have worked if you scalped. So I think it's totally feasible. I think you just have to be okay with that. If you go for the actual scalp target based on the ATR, you're 99.9% chance you're going to get your scalp as long as you read the market right. With a 1-to-1, that 99% chance changes. You don't have a 99% chance because sometimes the move has gone too far and the candle might be huge. And so a 1-to-1 target might be large, or it might make it so you can't get to the low before you get out. There's a lot of nuance to it. So anyway, I know that that's a longer answer, but I personally think that beginners have a better chance doing it the way that we do it. Just going for the scalp target the way that we do it and just keeping their win rate high. And I think that beginners can have a high win rate as long as they're selective. For example, there's some people that have gone through that have, like I was talking to somebody in my community recently and they had 15 trades in a row that were winners. So think about that. 15 trades in a row that were winners going for scalp target. Even if you take a loss, even if you take a 25 tick loss after that, you're still so up on your account like that. So just keep that in mind. When I first started trading, was I hesitant entering my trades? You feel like that's you these days, not sure if it's strategy related. Yeah, when I first started trading, I was a little bit hesitant because I didn't have a lot of confidence in my strategy. And that's the thing, like when I tried different strategies out, what would happen is if I wasn't confident, I would have a lot of hesitancy opening the trade, or I would have a hard time letting the trade play out the way it was supposed to because I wasn't confident in the strategy. Most of this comes down to being confident in your strategy. So I don't use any indicators now besides this 21 EMA, and that made me a lot more confident in reading the price action. So now I'm completely okay letting my trade play out. When I take a trade now, I'm confident that it's going to work. I let it play out. I'm confident in how my strategy works. And so I don't have that hesitancy anymore. But if you're not confident in your strategy, that's likely where that issue is coming from. And so what you want to do is just, like I said, trade on a demo account for a while with the strategy that you're doing and wait until you have extreme confidence in your execution and the trade's working out, because you need to be confident going into each trade, not confident in a way where you're overconfident for no reason. You need to be confident because you've tested it so much that you just know it's going to work.